Imagine a world where every dollar in your pocket whispers secrets to the powerful, where your morning coffee purchase could be denied if it doesn't align with the government's latest decree, and where the very essence of financial freedom hangs by a thread. Now, picture a shadowy figure in 2008, cloaked in anonymity, unleashing a digital rebellion that could either save us or be crushed under the boot of centralized control. This is the epic clash between Bitcoin, the renegade currency born from code and chaos, and Central Bank Digital Currencies, the iron-fisted evolution of money engineered by the world's most formidable institutions. And tonight, we unravel the shocking truth. Will CBDCs destroy Bitcoin, or will they inadvertently crown it as the ultimate bastion of liberty? Our story begins not in the gleaming servers of Silicon Valley, but in the dusty annals of human history, where money first emerged as shells on ancient shores, evolving into gleaming gold coins clinking in the pouches of Roman emperors, a tangible promise of value that empires rose and fell upon. Yet as civilization swelled, so did the temptation to tamper. Enter fiat currency, unbacked by gold, birthed in the 17th century by desperate Swedish bankers printing notes on paper. A sleight of hand that allowed kings and governments to inflate their way out of wars and whims, setting the stage for the central banks we know today, those monolithic guardians like the Federal Reserve, founded in 1913 amid whispers of conspiracy on Jekyll Island, where tycoons plotted to stabilize a fracturing economy, but in doing so, sowed the seeds of endless debt and devaluation, eroding the savings of generations with invisible theft called inflation. Fast forward to the late 20th century, a time of digital dawn where computers hummed with potential and an underground movement of cypherpunks. Visionaries like David Chaum, who in 1982 dreamed up eCash, a cryptographic money that promised anonymity, or Wei Dai's B-Money in 1998, a decentralized ledger of value, began to challenge the status quo, fueled by a distrust of authorities after scandals like Watergate and the endless printing presses funding Vietnam. These rebels, communicating through encrypted mailing lists, saw money not as a tool of control, but as a right to privacy, echoing the emotional pleas of Hal Finney, who in 2004 lamented the erosion of personal freedoms in a world of surveillance, setting the philosophical foundation for what was to come. Then, in the shadow of the 2008 financial crisis, a cataclysmic meltdown where banks like Lehman Brothers collapsed like houses of cards, trillions evaporated overnight, and ordinary people lost homes while Wall Street fat cats walked away with bonuses. The stage was set for a hero, or perhaps an anti-hero, to emerge. Enter Satoshi Nakamoto, a pseudonym shrouding a person or group whose identity remains one of history's greatest enigmas, releasing on October 31, 2008, a 9-page white paper titled Bitcoin, a peer-to-peer electronic cash system, a manifesto that proposed a radical alternative. A digital currency powered by blockchain, a tamper-proof ledger distributed across thousands of computers, where transactions were verified not by banks, but by miners solving complex puzzles, rewarded with new bitcoins in a process mimicking gold mining, capped at 21 million coins to prevent inflation's curse. The emotional weight of this moment cannot be overstated. Satoshi embedded in the Genesis block, mined on January 3, 2009, a headline from the Times. Chancellor on brink of second bailout for banks. A silent scream against the very system that had betrayed the world, igniting a spark that would grow into an inferno. Early adopters like the legendary Laszlo Hanieks, who on May 22, 2010, traded 10,000 bitcoins for 2 Papa John's pizzas, now worth billions, tested the waters, while Hal Finney, battling ALS, became the first to receive a Bitcoin transaction from Satoshi himself, his tweets radiating hope amid personal tragedy, declaring Bitcoin a force that could work despite skepticism. As Bitcoin stumbled into adolescence, it faced trials that would forge its resilience. The 2011 hack of MT. Gox, the early exchange that handled 70% of trades, leading to a price crash from $32 to pennies, evoking the despair of investors who watched their dreams dissolve. Yet from the ashes rose a community of hodlers, a term born from a drunken forum post in 2013 urging to hold on for dear life, as prices plummeted 85% amid China's first ban. The Silk Road Saga, where Ross Ulbricht's dark web marketplace showcased Bitcoin's anonymity but drew FBI scrutiny, culminating in his 2013 arrest and life sentence. a dramatic courtroom battle that painted Bitcoin as both villain and victim, fueling media hysteria that labeled it drug money, while ignoring its potential for good, like funding dissidents in oppressive regimes. The halvings, those quadrennial events where mining rewards are slashed, designed by Satoshi to mimic scarcity, became Bitcoin's heartbeat. The first in 2012 propelled prices from $12 to over $1,000 by 2013, a euphoric bull run that minted millionaires overnight but crashed in 2014 amid Mt. Gox's final implosion, wiping out $450 million and leaving users in ruins, their stories of suicide and loss a somber reminder of volatility's blade. Yet Bitcoin endured, drawing in visionaries like the Winklevoss twins, who fought Zuckerberg for Facebook but bet big on crypto, founding Gemini amid regulatory wars. The 2016 having ignited another surge, peaking at nearly $20,000 in 2017, a frenzy of ICOs and retail mania where grandmas bought in at peaks, only to face the brutal 2018 bear market, an 84% drop that tested faith. But institutions crept in, with Fidelity launching crypto services and backed promising futures, signaling mainstream infiltration. Emotional highs peaked in 2020-2021, amid a pandemic that exposed fiat's fragility. Governments printed trillions, inflating away savings, pushing Bitcoin to $69,000 in November 2021, adopted by El Salvador as legal tender under President Bukel's defiant stand against IMF pressure. A move that empowered unbanked citizens but drew global ire. Tesla's Elon Musk tweeted it to the moon, investing $1.5 billion, only to U-turn on environmental concerns, triggering crashes that evoked betrayal among fans. The 2022 bear, exacerbated by FTX's collapse, Sam Bankman-Fried's empire crumbling in fraud, erasing billions and jailing a wunderkind, plunged prices to $16,000, a gut-wrenching low where doubt crept in. Yet BlackRock's ETF approval in 2024, after years of SEC battles, flooded in billions, pushing Bitcoin past $100,000 by 2025, a testament to its phoenix-like rise. Now held by nations like the U.S. Strategic Reserve under pro-crypto policies. But as Bitcoin ascended, a shadow loomed. Central Bank Digital Currencies, or CBDCs, the establishment's counterstrike, digital fiat issued directly by central banks, promising efficiency but harboring control. Their genesis traces to 2014, when China's People's Bank eyed blockchain post-Bitcoin bans, launching the digital yuan, or eCNY, in 2020 pilots, tested at the Beijing Olympics where athletes swiped programmable money that expired unused, a chilling preview of engineered spending. The ECB's digital euro, announced in 2021, aimed to counter private cryptos, while the Fed's cautious explorations via Project Hamilton in 2022 debated privacy amid fears of surveillance. CBDCs aren't mere upgrades. They're a digital leash, as admitted by WEF panels where experts like Agustin Carstens of the BIS warned of absolute control over transactions, programmable to restrict buys like ammunition or carbon-heavy goods, evoking dystopian novels where money enforces behavior. China's rollout to 260 million users by 2023 tracked every penny, crushing dissent as seen in frozen accounts during protests, while Nigeria's e-naira flopped amid public distrust, highlighting adoption hurdles. The shocking tension builds. Will CBDCs destroy Bitcoin? Proponents argue yes. Governments, fearing Bitcoin's decentralization, could ban on-ramps, as India toyed with crypto taxes at 30%, or outright prohibit like in 2021's failed U.S. bills. CBDCs offer stability without volatility, luring masses with seamless payments, potentially rendering Bitcoin a niche relic, as Lagarde of the ECB disparaged it as hype, while pushing stablecoins as bridges to control. Shocking revelations from leaks show central banks viewing Bitcoin as a threat to monetary sovereignty, with plans to integrate surveillance that could flag suspicious crypto trades, eroding privacy and driving users underground. Yet the counterarguments surge with emotional force. Bitcoin thrives on adversity, its network hash rate hitting exahash levels in 2025, unassailable by state attacks, as seen in surviving China's mining ban in 2021, relocating to Texas and Kazakhstan. CBDCs validate Bitcoin's thesis, exposing fiat's flaws. Programmable money highlights decentralization's value, pushing adoption among privacy advocates, with figures like Snowden warning CBDCs are perversions of crypto ideals. Experts like Andreas Antonopoulos argue they serve different realms. Bitcoin as digital gold, a store of value appreciating 45% annually, while CBDCs mimic failing fiat, prone to inflation. Shocking data from 2025 shows Bitcoin's market cap surpassing $2 trillion, held by 200 million users, while CBDC pilots like the Bahamas Sand Dollar struggle with 50% adoption, plagued by hacks and distrust. The drama intensifies with real-world clashes. Russia's 2022 crypto pivot amid sanctions showcased Bitcoin's sanction-proof nature, aiding Ukraine's war efforts with $100 million in donations, while CBDCs like Iran's digital rial aim to evade the same but tie users to regimes. Emotional stories abound, like Venezuelan refugees using Bitcoin to escape hyperinflation, sending remittances without banks skimming 30%, versus CBDC fears in Brazil's Drex, where programmable limits could ration food during crises. As we approach 2025's horizon, with over 100 countries exploring CBDCs per the Atlantic Council, the shocking truth emerges, not destruction, but symbiosis laced with peril. CBDCs may attempt to co-opt Bitcoin's tech, as seen in FedNow integrating blockchain elements, but they amplify Bitcoin's allure as the uncensorable alternative, driving black market premiums in oppressive lands. Yet the real danger lurks in hybrid dystopias, where governments mandate CBDC wallets linked to digital IDs, taxing Bitcoin gains punitively or freezing assets, as hinted in EU regulations. Visionaries like Balaji Srinivasan predict network states, where Bitcoin communities secede digitally, evading control. In this cinematic saga, Bitcoin isn't just code. It's a rebellion emotional echoes of the American Revolution in bits and bytes, where Satoshi's ghost rallies the oppressed. CBDCs, for all their might, may falter on human spirit as pilots reveal glitches like Sweden's e-krona facing privacy backlash, or Jamaica's Jamdex at 5% uptake. The shocking truth. CBDCs won't destroy Bitcoin. They'll immortalize it, forcing a choice between chains of control and wings of freedom, where every halving, every node, every hodler fortifies a fortress against tyranny. But beware, for if apathy reigns, the digital dollar could seduce with convenience, only to clamp shut like a trap, leaving Bitcoin as the last light in a darkening world, its price soaring as the ultimate hedge, or crumbling if regulators succeed in their siege. As the credits roll on this historical epic, remember, the battle for money is the battle for the soul of humanity, and in the end, it's not the currencies that decide, but us, the dreamers, the doubters, the defiant, who hold the power to choose liberty over chains.